Again, welcome, excited to go over this subject with you today, talking about succeeding in today's laissez-faire world, especially in the United States these days, and just thinking about that and understanding what we're talking about when we say that, and other ways that you can be successful and understanding that continuum. So again, we'll just give everybody a couple more seconds to get in here and make sure that we're good. Hopefully you have pushed the button for the sound and you can hear me well, but go ahead and get started here in just a second. So hope you are having a happy Wednesday, or if you're watching this on demand, whatever day and time it happens to be for you right now. For us, it is into September, pushing into fall in 2025 on a Wednesday afternoon. So let's go ahead and get started, and let me share my screen with you so that you can see what I see. And let's see here. I'm going to share this window. There we go. Okay, so if you have questions, feel free to pop them in. I'll hit some of them as we go, some of them at the end. But today we are talking about, do I have to be laissez-faire to succeed in a capitalistic world? And so I think it's beyond debate in terms of economic success that capitalism has triumphed, right? But there are a continuum of capitalistic variations, and you can go all the way to the hard, most critical of it, laissez-faire, all the way to the opposite end of the spectrum, which has never happened, of like a pure communism. Okay, and so right now we are way closer to one side of it, and so thinking about how you can succeed, even if that's not your ideal of what you would want to have happen with your society and community and world for your kids, etc. So let's talk about things. So we're going to talk about, just defining it, helping you understand if you don't understand the difference, or maybe there's just confusion. We're going to look a little bit back through our history and economic journey, even a little bit beyond the formation of the United States, discover, some of the modern alternatives that are out there, and then just thinking about taking action for you as an individual, because that is why capitalism has done so well, kind of post feudalism after the Enlightenment, is that individuality, and the West kind of really taking that to the extreme. So we will do that. So what do we mean by capitalism, right? And so just so we're all on the same page, it is an economic system, okay? Because we can have social systems, we can have economic systems, we can have forms of government. And I think a lot of people like to hodgepodge these things together, and they don't totally understand. A lot of people, pick me up, go back to where we were. A lot of people will use these things interchangeably to think communist is communist China or the old Soviet Union, and capitalism is the United States primarily, and maybe some of the other Western countries in Japan, or authoritarianism, right? That a certain form of economic system is a form of state or government, and it's not, right? So when we talk about capitalism, it's economic in nature, and there are different variations to that. I mean, you can have authoritarian capitalism, you could have a democratic capitalism, you could have like the United States where it's more of a republic. Some would argue oligarchic capitalism, right? But this whole thing about markets, and so the markets of people, through supply and demand as the primary mechanism, or invisible hand, if you will, and are familiar with some of the literature on it, is able to make an efficient system from price signals and competition, and theoretically come to the most efficient, balanced expression of these things coming together in the economic system. And if you do a very good job, it rewards you through that value creation and punishes waste. Okay. And so, that's a very simple definition, but like we said here, it's not monolithic. There are all kinds of variation in terms of regulation, mixing in with some of the other things we're talking about, like socialism, et cetera, inside of here. So, it's dominated by private ownership. The market hopefully efficiently allocates resources. And of course, as we said, there are lots of variants, and it is dominated by a focus on the people that own the companies. And hopefully, if it works efficiently, have been allocated more resources because they use them more efficiently for the progression of that society. So laissez-faire is French term talking about capitalism's purest form, where government or the state does not really intervene, really believing that the markets are efficient and they will work things out on their own, and it doesn't need anyone to balance the scales or put things back in balance if they get out of balance, maybe control or punish bad market participants, etc. And so it promises the maximum dynamism of capitalism, and by allocating resources without restraint to those that hopefully are the most efficient with them, and no boundaries on that competition. Okay, then the peril here, you can get a lot of power concentration. It can be manipulated externally. You can have market failures. So I think even if you look at our own history in the United States, throughout history, when we push more towards laissez-faire, there could be more wealth creation, but you're going to see a lot more boom and bust. And you do see that, especially in capitalistic markets, is you'll have these boom periods of really good, and things will go too far and it's going to bust and it'll come back down. And so the more that we've seen historically, again, it's not a long time that capitalism has been around, maybe 300 years or so. When you get to the extremes of laissez-faire, you'll see the bigger boom and bust cycles, which tends to be harder on the middle and the lower class, right? Okay, so let's keep driving on here. So then we talk about the opposite end of the extreme or continuum, and you got communism. It's on the way end over there. And so that's a theoretically classless society, actually also a theoretically stateless society. So we think about like the Soviet Union and the Bolsheviks and Stalin and stuff, and like, that's communism. Not really. It's kind of an authoritarian regime that was state-centric and owned a lot of things, but really wasn't, when you think about it, kind of like equal for all, right? I don't know that in today's organization and where we are with how many resources we have and how we treat each other, that this is even possible, all right? So anyways, thinking about that, it is very much theoretical. There have been people that have tried, but I think more than not, the ones that have succeeded just used it as a means to power. It hasn't really been tried. And then socialism, you see this a little bit more, but it just tends to get mixed in with capitalism in some form or another. But social or collective ownership of the means of production, kind of some of that wording that comes from communism, but it's a little bit more open-ended, and you do see a lot of variations, just like capitalism, usually mixed with capitalism to various degrees. Okay, and so again, like I've been talking about, that continuum you can see here. Okay, so we go all the way, laissez-faire, near zero regulation or change, all the way to communism, where there is no real regulation or state, but people do right and share ownership of everything and work as hard as they can and split everything with everyone, which, again, kind of unreasonable, I think, on both ends. Obviously, we continue to try this whereas nobody's really trying this anymore. And then most people are kind of mixed in between here, and especially the United States is pushed way here, and you see Europe, kind of somewhere around here, maybe Japan around here, and then even the ones that would say that they're communistic would be like China, would be more here. They still have strong markets, and it's not totally collective, etc. So you find this mix in between there, and that's really what we're talking about with that continuum. And so if we underline kind of look at what are the dynamics here, we are mixing community with the state and the markets. Okay, so communities, we're going to have communities regardless. Everybody lives in communities, whether it's your city or your state or your country or your neighborhood, or your school system when you got kids in a district or so. And then we got our markets, so whether they're, economic markets, financial markets, you could have trade, different types of trade markets, and then you could sub that even down to, you could have pharmaceutical market, you could have a market for textiles. That was one of the earliest ones, right? And then the state, whether it be like we had talked about before, a democracy or a authoritarian regime or a republic, etc. And when you mix these things together, like say community and markets, then you can kind of see these different things. You mix the state with the community, you can get social programs like in the United States, Medicare, Medicaid, Social Security, programs for special needs children, etc. And then you have the state with the markets, you can have regulated markets. And so again, if it's less state, more markets, that's more laissez-faire. If the markets are way over here, close to the state, and they're very regulated, then you get something like China, or a little bit less like South Korea, where it's it is a guided, they have a plan, even though they may let some people own some things and it may be shared owned by the state, but they have a plan for the future of how much is going to be allocated resource wise versus just letting industry and business do it. And then, of course, like we had said, most places are this mixed economy of pulling in various ways, somewhere in the middle there. So just a different way to look at it that helps you understand a little bit better. So here, busting common myths, I think an easy one is capitalism equals greed. I think, of course, there is a decent amount of that, and people wanting to do better for themselves and make it, get the American dream, or be one of those people that you see on the shows to be wealthy and be able to do whatever you want, I think is a driving factor for a lot of people. And I think that's one of the reasons capitalism has succeeded so much, is because it does work very well with the practical nature of most human beings that want to succeed for themselves. But it doesn't necessarily mean just greed in the bad sense of things, right? Some people just want to succeed and do well and see other people do well, but just be rewarded for how hard they work and how they succeed. So it can be greed, but I don't think that it in itself equals that, right? And then on the flip side, socialism doesn't have any markets. It's just the government telling everybody what to do, and you don't get rewarded in so. And that's generally not true. Most socialist models, or even like we had talked about multiple times, the Chinese saying that they're communists, have tons of markets, and they've actually succeeded very well at what they're doing, right? But they're still market, right? They've kind of made their own very light version of capitalism, but very robust in its success still, and competing out there in the world market. And then regulation doesn't necessarily mean anti-market. So it's like free markets or regulated markets. Like people think it's like only one or the other. And that's just not the case. A lot of the regulation that we've gotten in the United States came from bad things that happened in the markets and manipulation and inefficiencies and et cetera. And so it's kind of sad that a lot of the deregulation happened because we forgot what had happened in the past, or we didn't think that it applied anymore. And some of it may have gone stale and not been needed anymore. But I would say at least a good half or more of it was needed, and taking those governors off and forgetting those lessons of history is not necessarily our proudest moments. So looking at history here, if we go back and say, where are the roots, the foundation of ourselves for the country that we became, not necessarily the country of North America and who was here before, but where the United States got its roots is through, mercantilism. Okay. And it really was kind of the Dutch and the British that really kind of formed capitalism in its modern sense. But over here with us, it's all built on trade and mercantilism and resource exploitation. I mean, the United States is super resource rich and was sparsely populated. And so that is where a lot of everything came from. But like, as I had mentioned, the British and the Dutch had made some of the first companies, like stock companies, where people could invest in them. Now, of course, it was very elitist and what so, but the East India Company and the Dutch East India Company, and of course, those made some of the first bubbles early on. But still, markets where they were experimenting with people being able to invest and be shareholders and have equity in things. And then those that were driving those companies, the ability to raise capital to do things rather than just a king or a queen or someone saying they could do it and giving them some of their treasury or what so. And a lot of people say, well, there were merchants and people traded and tried to make money, in Rome and Greece and, Egypt and what so. And even in medieval feudalism, but it was a separate system, not fueled by the individual drive, generally societally, which didn't really come until after the Enlightenment. And then as people got more rights and it wasn't just land focused, then that's where you really see. And so as the United States was coming up as a baby nation, Britain and what so had kind of made these things, and we kind of took it a little bit farther, right? And so then really when you see capitalism get its feet underneath of it is the industrialization period. And so in England and Great Britain and the United States, this rapid transformation of using resources and technological development, productivity gains by being able to use machines and resources more effectively, and even labor with these things and labor with some of these technological developments made huge productivity gains. And of course, people that were talented, that had the resources to be able to allocate and continue to build, made that acceleration even faster, or progress even faster. But kind of the downside of that is that you just saw concentration of monopolistic power come up so big, with the railroads and the steel industries and coal and oil, et cetera. They had these almost like barons, and then even eventually the Republicans almost lost themselves to the whole movement. And some of you may be familiar with Teddy Roosevelt, and he was on the conservative side of things. But one of his things, and kind of became pretty famous for it, was trust busting and knocking down some of these monopolies and monopolistic power, because he believed if we didn't take care of people and curb some of these powers, that capitalism could destroy itself. And he's like, all right, we got to make some amendments to protect it so that it doesn't fall apart, right? And so it's interesting. It was an interesting time in our history that a lot of people don't know as much about. And so, but that is when it really scaled up. And so, where did the middle class come from? It really came from a lot of the productivity gains and stuff that industrialization and modernization was making. But until after, things really fell apart, in the 29 through to the Depression. We talked about earlier the boom and bust. This was a big bust cycle until a lot of these bad things happened and people lost their homes and didn't have money. And there were very few people, like percentage of the population, that had really gained too much to the late 1800s to the early 1900s, the roaring 20s, as they called them, that it was still very have and have not. It's like you worked in a factory or you worked a farm, barely making it. And that was the majority of people in our country. And then there were some people that lived in the cities that did a little bit better. And then there were the people that owned everything, right? And so it was very concentrated wealth, and there really wasn't a lot of middle class, okay? And so I was going to show you a chart here. There's a couple of these in here that I'll show you. But just so you kind of look at it historically, and this is just a stock market graph, but it goes all the way back, into the 20s here. And so you can kind of see the tail end of that. And there were various boom and busts, from like 1870 till 1929 with the big crash and the Great Depression. But big boom bust because, like I said, that laissez-faire, it was a wild ride. And then, of course, culminating here in this Great Depression, which a lot of people would debate that we might have never gotten out of it without World War II. Of course, you had, the New Deal, that there were tons of programs, more socialistic type programs put in place to try to get us out of that. But really, until we fired up the embers of our industry to fight World War II, which really didn't get us out of the market turmoil or what's out. But eventually, after it was over, and we started building homes for everyone, and there were labor protections, and a lot of the legislation that got passed from the misery that was caused during this time period put in a lot of these protections that fostered this middle class in between here. Okay, so between the end of World War II, 1945, till the early 70s, when we hit this period of stagflation here, was probably one of the most productive in history, and it was one that actually raised all boats, right? And so, like we talk about the middle class, where did it come from? I mean, historically, there really wasn't a middle class, or they're a very small percentage. And so that is kind of one of the United States, in my opinion, true claim to fame that doesn't have a bad backstory, was our development of the middle class and how successful that became, with people all working hard together under capitalism, and a little probably bit of more mixed capitalism, not laissez-faire, because we remembered all the kind of injustices and bad things and, child labor and, et cetera, of the late 1800s and early 1900s. And so you got labor rights. We got where we protected children and got access to education, and made it mandatory, and educated our people, and actually made people a resource, right? Like your human resources think you're a resource. And so we built all these things, and the productivity gains to a certain degree were shared, not equally, but decently, with the lower to middle class, not just usurped by the barons of industry that owned the monopolies, right? And so that was very good for us, and kind of, really blew us up from 1945 to 1970. And then 1970 to 80s, things changed a little bit from just industrialization, productivity gains, and humans from just them learning more gains, to where technology started to hit in a little bit more. And we start to, have computers, and business comes in, and then we forget a little bit of why we put some of the protections that made this so. And so, kind of with Reagan came that era of let's deregulate everything, let's go to more laissez-faire, right? And from the 1980s all the way until now. It really has been about a 25-year period of let's go back to the late 1800s, but with a whole bunch more people and a whole bunch more technology. Okay, so it is interesting that a lot of people don't even realize that. And actually, let's go back to that graph here where you can see, and you can kind of see, this is just stock market. Again, we're not measuring everything in the economy or whatsoever, but you can kind of see where we start to deregulate and reduce the taxes. You get an explosion. I mean, huge up, almost as much as here. This was more socioeconomic. This was more deregulation and capitalistic with a tech flourish. But of course, some of the tech was overblown. A lot of it failed. We had the tech bust. And then, of course, we started to recover. And then we had the housing bust. And since then, we have really kind of exploded up with some more of the productivity gains that we have. But unfortunately, unlike here and halfway here, this was very egalitarian. It was split and created the middle class and brought a lot of people out of poverty. This was split, and this has been very much the upper, 10 to 15% benefiting, especially the upper 1% of wealth on this part right here. Okay. And let's go back to my other slide deck. So again, you can ask questions as we go along if you like. Otherwise, I'll hit a couple at the end before we sign off for the day. So this is I like to show this just so people can see, and this is just since 2008. We could even go back further, but the top one here is just showing you just since 2008, since we had kind of the housing crisis here. You can see the top 1% own about 32% of everything. Okay, and now it's at about 45%. So basically, over this time period, their ownership percentage has gone up like 50%, so they've almost, 50% of what they had going up more. Okay. Now this, you can look at through time, but this is called the wage productivity gap. And so it looks at productivity divided by wages. Okay. And so basically the lower this number, the better that when we progress as a society, that the wages of the people that are producing a lot of that, so the workers, are getting a decent amount. The more it goes up, the less they're getting of that. Okay, so you can kind of see in 2008 it was at 15. Okay, and now it's at 42. So that's almost 3 times higher. That's bad. So that means the people that own the stuff are taking most of any gains that we have as a society. Okay, and not passing it along to like what made the middle class. I mean, that's the easiest way I can explain it to you. And so this is a bad thing because, again, when we look at like what probably made us very successful as a country after World War II, it was that development of the middle class, and now we're just kind of getting away from that, almost back to the point of where we were ready to almost destroy ourselves with industrialization and wealth and income inequality back then. And unfortunately, if you really think about why a lot of the Europeans wanted to come to the United States, it was for economic opportunity because there was very little opportunity back in, England, France, and because the people that were there, the aristocracy already owned everything, and there was very little chance that you were going to get cut in, right? So they're like, let's go to this new land of opportunity and go somewhere where we can have opportunity. And unfortunately, the path that we're going on is recreating that inequality and less opportunity, which is one of the main reasons we came here to start this country. So another thing I like to hit, because this is happening, in the last 20 some years, to where private equity is becoming very big. And private equity, there's always been private companies, and as small and medium-sized businesses, especially how we think about them, about being mom and pop shops, and the things where your aunt had a bookshop, or your dad ran his own tax practice. Those are great, and we're not talking about private equity. Private equity are like huge companies where lots of investors own shares, but they're not publicly traded or publicly available. You got to have certain accreditations or whatso to have access to them. And they don't necessarily have to follow the same rules, like the regulatory rules for openness and transparency and whatso that a lot of the public companies trade. So they're generally unlisted. You don't see them a lot. There are some private exchanges, especially with technology now, where you can look them up. But it's very difficult to invest in. There's not as much investor protections, et cetera. And so it can be dangerous as well as lucrative. Okay. And generally, when people like say you have a company that's public, like Nvidia or Meta, or there's a ton of small companies that you don't even know, and small companies in the public stock market still be huge, like 300, $500 million market capitalization, which just means it's their stock price multiplied by how many shares there are. They go to these markets because they want to be able to raise capital to be able to build things or to make things or to expand or to acquire something, etc. So it's awesome to be able to tap the public markets to be able to raise funds to be able to continue your operations or expand them, etc. And so with private equity, very similar concept, except they're not necessarily going out to, or being listed on an exchange like, NASDAQ or, Dow Jones or whichever one that they're on, right? And there are a lot less rules and most people don't have access to it, okay? And so to me, most private equity is not positive for society, okay? Because it is really trying to make a lot of the investment opportunities only available to the ultra wealthy or the elite without the consumer protections or regulations that public companies have to try to protect investors and to make things transparent, to make sure that things are being done right? So that we don't have as much harm on society. And they tend to have, even more than the public companies, a high returns focus. And then since everything isn't transparent and public, you can get a lot of negative things that happen from that in terms of people not caring how a company is run as long as the high returns are there. And so, there's a lot of regular people that have done well, like baby boomers and whatso, and they become accredited because they've grown enough money. They're like, well, I expect 14% per year return from this. That's really high. I mean, you're not going to get that without some kind of compromise. And a lot of these compromises are, we're going to maximize shareholder return at other stakeholders' expense. And so the other stakeholders that are involved in businesses are employees, customers, communities, countries, so there's all these people that have a vested interest in a company besides just the people that own it, right? And so private equity is kind of that extreme, or can be that extreme, of really only elevating the shareholder at a lot of times bad societal outcomes. I think that's a lot of what's happening that's going wrong with veterinarians and the healthcare system. There are lots of industries that are majority owned by private equity now, and you see what will end up happening is they'll come in and try to reduce expenses on employees in non-good ways to that group of people. They'll raise prices on things and make sometimes even unaffordable. So even like in vet care, you could see like you could go in and used to be able to, your dog has an emergency and they could, save them and give them emergency care on a Saturday for a couple $100. Now you take your dog to an emergency vet on Saturday. I mean, it's probably a miracle if you're getting out of there for $1,000 to $2,000. Otherwise they'll put your dog to sleep for $200 if you just can't afford it. It's just inhumane, right? And so a lot of this does come from private equity. Okay. And so if you look at this, you kind of see the growth of public markets are this red one. And that's huge, right? And especially here, from here to here, a lot of this has been that magnificent seven, the majority of it here. Okay. But still, from, 1998 until this goes just 2023, it's up, from 20 to 75, three and a half, a little over 3.5 times. That's a lot of growth, right? Well, you look at private equity, it's like 0.3 to 8. So it's up like 12 times. Okay, so this may look so much smaller, but it's huge. And if Nvidia and Apple and Google lost a decent amount of market cap, that could cut this down, and then in just a few years this could be up. So I had a couple extra pieces of information in here, just that is like, it's alarming in my opinion. When you look at public companies, okay, the last 25 years they've decreased. So the public companies that we all can invest in stocks have decreased the last 25 years from 7,000 to 4,500 of them. And then when you look at private equity, they've gone from 2,000 to 11,500. And so our society is very quickly transitioning from something that's open to everyone to invest to something that's open only to a very few, and a lot of times the more elite, ultra wealthy, right? And that's not a good thing. Okay. So as we talked about, the pros of private equity is access to capital from, different sources besides just the public markets that are more highly regulated. And some people just don't want to go private. And, we like our country being free and people being able to have choices to do what they want. They can have operational improvements from restructuring, long-term focus outside of quarterly pressure. So like I said, there's a lot less regulation. And so they don't have to, be transparent or conform to some of those things. And there can be potential high returns to the shareholders, which we talked about, but that also has the con side of things. So it's non-transparent. We're losing some of that regulation and the things that we learned from the late 1800s to early 1900s that caused a lot of catastrophe in the past. It concentrates wealth. Okay, so most of these things, as I mentioned before, are mainly accessible to institutions and ultra wealthy. There's a lot less accountability since they don't have to publish and be transparent. They don't have to tell you. I mean, there's some of these, like even like hedge funds and stuff, they don't even have to publish like their returns or or tell you how they made them. I mean, that's how Bernie Madoff scammed tons of people. They can load companies with debt and do innovative things. Like when you talk about like Gordon Gekko, like greed is good, but they're just destroying people's lives and these companies that actually used to make things just so that someone in the short term can make awesome rate of return on some investment that's actually destroying part of our society. And there's just like sometimes venture capitalism, there's a short-term exit focus, so that they can get in, make a great rate of return, get out, redeploy the capital somewhere else. But you can see just from me talking about that, how that could be very destructive as well too. And not in the old way of capitalism of creative destruction, where some things need to die for new things to be born, etc. And so a lot of this does very much lend to inequality. We got a question. It says, how could the United States rein in our capitalistic mentality as we continue progressing down this road of wealth inequality? It's difficult because right now, and I think a lot of, unfortunately, the stories that we like and the reality TV shows and the movies and the shows glorify people that are just ultra wealthy, and we're just like, oh, cool, I want to be that too. I want to have a big boat. But the probabilities that that's going to happen for you or for the average American super duper low. It's kind of like the lottery. And so I think a lot of people have not wanting to stamp down on this under the unstatistical belief that they'll be rich and they don't want to be clapped down on. So they're letting the societal problem get out of hand because of that. And so I think it's like one of those things that I think we're very close on the road to it happening, to where a bunch of bad things got to happen again. Hopefully not as bad as the Great Depression but maybe just as bad or worse as like the housing collapse of 2008 the Great Recession. Maybe a little bit more than that. I mean, people need to feel the pain, I think, before they're going to be like, listen, what you guys are doing is not working. Maybe it is just like the tax break we just made, to increase our, deficit spending up to like 7% per year. And if interest rates go up some, the amount of interest we'll have to pay on the debt could be catastrophic. And if people don't want to lend it, we could be in a world of hurt. And you think Greece was bad with a debt crisis. I don't think we're that close to that happening, but that could be the penultimate if that happened in 5 to 15 years. Or something. And obviously, it accelerates it when we just give a tax break to the ultra rich people that don't need it. It's absolutely outrageous that we're going to increase our debt that much to give tax breaks to the ultra rich, which only makes the inequality worse. And unfortunately, I think what is happening is we're kind of destroying the superpower that our capitalism had, which was a very diverse, broad-based, consumer-based, middle-class capitalism, back to the pre-early 1900, where capital was concentrated way at the top and wasn't near as successful, except for when you hit the roaring 20s, the stock market's taken off, and very few people just getting to live crazy exotic. And then of course when it fell apart, it killed a lot of the financial system that the real economy needed and was dependent upon. So anyways, so you get a lot more fragility. So like I said, it's robust when it's broad-based middle-class capitalism where people are buying lots of different things. If you just have the wealth concentrated in the top to where it's a little bit more fickle about what they'd want, or their minds could change, you get more, it's more fragile that it can break, or people just stop spending, and you just have a devolving it's a self-fulfilling prophecy sometimes with recessions and talent misallocation. So the more that you have this huge divide between have and have nots, you're not going to be able to find a lot of these people that could have invented or made a new business or industry, etc. I don't think there's any question in people's minds that there are tons of Einsteins and Elon Musks and in China and in Africa, maybe a little less so in India, just because I think there is more opportunity there. But there are tons there. That's where most of the world's population is. And how are we having all these people? I mean, some of it was from brain drain, right? We got Elon come over here to us, right? But I just think more than not, these people are just living and dying and never having an opportunity. And that's sad. How much better could the world have been had we found them and elevated them? So that is absolutely not capitalism being efficient. And then you can get political dysfunction. And I think you have a lot of that right now in the United States. It's called regulatory capture. So where your industries become so influential and money in our politics and corporations are allowed to give now, they can actually influence and control the regulatory regime. And so it's kind of like we started to deregulate, and now it's like the people that we're supposed to regulate have control of the machine, like the little alien driving the human body, like in Men in Black, right? And so that can also help things go off the rails as well. So let's just, instead of being glum, let's talk about things that we can do inside the system without just being pissed off at and railing on politicians like everybody likes to do. What can you do? Or what are some of these alternative models that work within capitalism? So you have B Corps. Like, we're actually a B Corp. And so B Corps are companies that just say, hey, we're going to try to take care of all stakeholders. So you can see our profile on B Corp. It's actually hard to prove that you do well by all the different stakeholders in terms of how you govern your company and the policies and procedures and how you take care of the people, your employees that work there, how you do right by the community and the environment and customers. And you can see, the median score for businesses is a little over 50. You got to get an 80 to be a B Corp. And you kind of see where we are. When we first did it, we were about 97. So the goal is to continue to try to progress. I've really never seen one over 140. I'm sure I just haven't gone through all of them. But still, I mean, getting up even to where we are is hard. I mean, we got to get bigger to where we can control some more of the more of the variables that we can't necessarily control. But anyways, B Corps are pretty cool. So instead of just somebody saying we're a good company, or like Huntington Banks after they've gotten that scandal with all of the NSF fees that they were loading on lower middle class and smaller bank people that couldn't afford them, that were a higher percentage interest rate than payday loans, just ran all these commercials and said, we care about our community, we'll refund it. And so it's like they say that they're good, but it's like, prove it. Like, get audited and let's see what your score is. Let's see how you try to make things better over time. I really like the B Corp movement. It's a little bit bureaucratic and a pain in my butt, but I believe in it. Instead of people just saying that they're good or doing good, you got to spend the time and the effort to objectively quantify it and get better. And then in some states, you can actually write it into your bylaws. And so when you do that, then you actually have a legal obligation through the state to try to not only fulfill, being a good company and taking care of shareholders and paying your taxes and whatso, but to try to accomplish, the other stakeholder goals that are a part of your company, of why you're a B corporation. Okay. And then you can have ESOPs and employee trusts. So ESOPs are where it's an employee stock ownership program. And so instead of like, where you see this a lot is there'll be like founders that started a good company, and when they were ready to retire, so they didn't want to sell out to private equity or just sell to another owner that wanted to put it in his portfolio to maximize and just drain the dividend income from it. It's like, hey, all these people that work for me help me build this, we are together in this. When I exit, I would like to sell to them. And there are different ways to accomplish this, but this is what we call broad-based employee ownership. And to me, this really needs to get bigger in our country. And is because I believe in capitalism, but it should help lots of people be owners, and we should all have a benefit and stake in our company, in our world, in our country doing better, not just the percent of 1% of the wealthiest people in the world, or some mindless, faceless private equity fund, right? And so if we can help people become owners of companies, then you'll see, I've got some of the stats in here. You'll get customers that are happier, you get employees that have better outcomes, they work harder, there's lots of productivity gains. And so you could still get a really good exit as an owner by helping other people become owners, and they kind of buy you out. Then you have like co-ops and credit unions and that really came around. Everybody's familiar with It's a Wonderful Life or when people couldn't afford to buy houses, and a lot of times the big banks weren't always there. They would fill in the gap, right, with the savings and loans and then credit unions being more of a nonprofit. Co-ops, I mean, one of the best examples I can see that is a little farm, and out in the country, you're not going to get AEP or Duke, and they really wouldn't electrify back in the day before a lot of the programs came around with the New Deal and so co-ops banded together to provide electricity out in these rural areas that weren't profitable enough for the for-profit businesses. And so like our co-op electrical is South Central, and it's more expensive to connect and put all the infrastructure out there to connect these farms and more spread out things out in the country. But they do a wonderful job, and they don't charge us any more than AEP does, which is amazing considering their costs are probably more than 2 times. And so these things have a place, right? And it goes together, and not just always to be profit maximization, right? And so, I think a term that I like that I heard probably like 25 or 30 years ago, is just conscious capitalism. I've heard conscientious capitalism as well too. Is just, there's a higher purpose than just making money. Absolutely, should you be able to make money if you work hard and you've got a great idea and you execute it and you take care of other people and your customers and you provide value? Sure, you absolutely should. But there should be a higher purpose. It's like, cynics start with why, right? Like, why are you doing what you're doing? Take care of all stakeholders, the customers, the employers, your suppliers, your community, our whole earth. And then, when you start from there and you care about this, then your leadership is just going to be better and people are going to trust you more. And hopefully, if enough people are doing this around the world, I think the superorganism of that is going to come out to better ends for more interested parties. And then you can have a better culture, right? And people can be happier at work. And so ESOPs, it just talks about, just some of these stats in terms of, people staying longer and not switching jobs, because it's not just about getting the highest salary. It's like, hey, I own this company. I'm a part of it. When I leave, my retirement's going to be, that much higher, and I'm going to actually be able to have a successful retirement, rather than the average retiree, only has, like $20,000 to $40,000 plus Social Security. That's crazy. How are you going to live off that? If you're watching this and you've done a good job saving, most people that we work with, have 400,000 to a couple million. And so I know if you're there or you've done your projections, you're on that path, it's really tough to understand that most other people don't have this, even if they're smart and hard workers and, et cetera. And even people in the ESOP doesn't mean that they're out there making the moves like some big CEO. There's generally an infrastructure, and there's still company management and stuff, but people may own a small percentage of the company and be a line worker or be, someone that operates the paving truck, or whatso. And it's pretty cool. Right. But they care that they own. It's like their company. They're not just working for the man. And so you get productivity premium. So it is kind of one of those, if done right, is one of those win-win-win things. And then, like we had said, co-ops, credit unions, member first economics. And when you look at a lot of like credit unions, you can get usually lower interest rates on your loans, or they'll make loans where other people weren't because they're a part of the community. And they work together. It's not just like cutthroat competition. Like I could have my little credit union, First Service, which is right across the street, whom I love, and I can go over to Kimba and they have shared banking, right? So I can use any credit union's ATM in the country, and they'll honor each other without any fees or anything like that. You can walk into the lobby and they'll treat you usually like a member, even if you're a member of a different credit union. So it's pretty cool. I mean, just to use these things when you can. I mean, a lot of the agriculture we do, except for the super farms, would be unsustainable and stuff without some of the co-ops that exist. And then in some of the bigger cities where it was unaffordable, like New York and whatso back in the day, they had these housing co-ops. Now, of course, it's kind of gotten perverted, in my opinion, over the last 30 or 40 years. But who knows? I mean, like in New York, it looks like some of that stuff could get, reevaluated and redone, maybe bring it back to make, housing and stuff more affordable again. We have a huge housing problem in this country, and nobody's really trying to solve it. Capitalism, that efficient market, is not solving it right now. And so ownership continuum, you can kind of see what we talked about. Founder controlled, where you start up a business, you own it. You get private plus investors, so you can do that on a small scale, or if it gets big, it turns into like private equity. And then public companies, where you get things like, Amazon and Nvidia and Salesforce, and in the public markets, you can buy it on the stock exchanges and in your brokerage accounts and in your 401k. Then you got your broad-based ownership, which is what we were just talking about. It's a little bit more complex, and it could be slower. But again, it's going to take care of a lot more stakeholders. Okay. So I'm going to start pushing through. I did a couple things here, and really, I'm going to make these fast because I'm almost out of time, but I just want to give some paths. And it's just like, not everybody's going to be an entrepreneur, but I think the United States is awesome because we have a higher proportion than most people. And I hope that comes back and people just don't like leave everything AI wise to just, the big magnificent seven, and the rest of us don't own anything besides a little bit of stock that we have in our 401ks or, Robinhood account or whatso. But so found a company from scratch, find a problem that needs solved, that you have a passion for, that you can make a difference in the world and make a business out of it, right? And then you build a company, and then if you make it successful, and you can absolutely fail. It's like one of the cool things that we've had that was actually different than most of the world, that you could start a company and if things went bad, you could claim bankruptcy and start over again. I know that still has some downside connotations to it, but most of the rest of the world, if you did something like that and you failed, they could throw you in jail and debtor jail. And so like a lot of people wouldn't do it. They wouldn't take the chance. And how great it is that we have entrepreneurs, right? And so you can do it, right? And if you do it and you're successful, when you're ready to exit or you need liquidity or you want to do something different, consider some of these broad-based ownership things. You may not get top dollar, like selling out to a private equity. You'd be surprised how close you could get, so, selling out to ESOP, you might get 5 or 6 times. Selling out to private equity, you might get like 7. It just depends on your industry and the type of company you built and what so. But a lot of people say, oh, wow, that's still a ton of money. Plus, this is going to be a ton more good for the things that I believe in and the people that help me build what I have, right? Path 2, this is probably the safer way to do that. And that is, kind of do your side hustle while you still work. And then once you hit certain milestones, then you quit your day job, right? And this is your day job. And then you kind of take the same path to build up your company to where you can decide at a certain point how to exit, right? And then hopefully do some of these cool things like ESOP or what's out. Practical path number 3 is just owning stocks in those publicly traded companies, right? There's a few private equity that are pretty good companies too, but I mean you can just buy them, and this is where the ESG movement came from. It used to be called socially conscious, and then evolved into environmental, social, and governance. And so you could choose who you invest in, and companies that are trying to do the right things and defunding ones that are not. And then now we're getting more to where we can vote proxies and even change companies that aren't the best actors to be better actors. And then there are community ownership opportunities where there's like investment clubs or where you can pool money together and own things under shared type values. And so you've got to figure out how to do it. What's your path? Are you like, hey, I worked for, so-and-so health services company for this many years, Cardinal, whatever. I'll probably continue to work there, but I do like this. I want to support companies that do this and invest more values-oriented, create more conscientious capitalism. You could do it. If you say, hey, I've got this business and I just always thought I was supposed to be the best at what I could, and then I just got to find an owner that'll, somebody that'll buy me out for the most money. Like I would like to research some of these other things of how I could, do something like an ESOP or equity trust, et cetera. And so we're reaching about the end of our time here, but I did get through most things here that I wanted to go through. If you want to talk to us, again, you can schedule a complimentary consultation. We have a lot of programs and services for business owners. We have a lot of ESG values-based investment strategies. Obviously, you can kind of see where we are as a B Corp. Even if you didn't need a lot of business guidance, if you had a financial advisor and you just wanted one that just aligned with you more, and then it could help you do some of these things, or maybe learn about as in 5 to 15 years you wanted to do an exit, how you could do that, then hire someone like us, that will help you that's more aligned. But you can kind of see between 1980 and 2023, like how things are just not going well between wealth inequality, that wage productivity gap here. Like that's huge, man. I mean, look how good things used to be for the middle class versus now. This is why most Americans are feeling bad, and unfortunately they're blaming the left and the right and immigrants, and that's not the problem. It is wealth and income inequality, right? And if people had more and felt more optimistic about the future, lots of other things would be better. And economic mobility, look at it, it's like half. It's crazy. So hit us up if you have questions, you need something, you just want to meet with a like-minded advisor. We're here to help. Otherwise, I hope I taught you something, or at least opened your mind a little bit, that it's not just like capitalism versus socialism. There's this whole intermixture, and you can be your own person, and we can make the world a better place while you earn for yourself, for your hard work and ideas, etc. So thanks for joining us again. Join us on some of the future ones. You can kind of see that's what we just did. Now we're going to talk about digital assets, which is crypto, and doing it responsibly. What's coming up next if you missed out on NVIDIA and stuff. How do you start when you don't have a lot right now, but you want to start investing? So there's a lot of good subjects coming up. Let me know, comment, give us some feedback. We're thinking about maybe switching our presentation from Webinar Jam to something else. So give us your feedback on, did it work well? Was it interactive? Was it high quality resolution, etc.? So thanks so much. Happy Wednesday. Happy start to fall. And I look forward to seeing you at the next one.